So please do start. We will join.
So, can we start now? Hello, am I audible?
Yeah, you're
Yes.
audible, sir. Please go ahead.
See, I I have one system issue that I cannot see half of my screen with some messages that is not getting closed. So please excuse me for that. Okay, so today we are going to cover the uh, uh, costing and the cost management and the budgeting process. So, what do you think the importance of the cost uh, in the social enterprises?
Cost should be a balance with making it efficient as well as maintaining quality.
Right. So what is the need for the identifying the cost?
One is to budget and control.
Right. So why we have to budget and control the cost?
You need to know how much resources you want.
Right. So when we say budget, it is not only about the cost but also about the revenue. We need to understand how much revenue is required, right? What one is revenue and another is cost. So for both of them, we need budget, as well as another important aspect is not only for what you call the revenue budget, but also the capital budget. You need some capital amount for some projects where you need to do the capital budget also. So we will see those one by one. So first and foremost thing, we discussed in the previous session the financial planning and the requirements for the financial policy making, how we include everything in that financial policy to ensure that the organization meets its objectives. So the financial planning, whatever we did, it is both in terms of strategic as well as the operational processes that included to achieve the objectives. Here, few things you need to understand. It involves building long-term funding strategies and short-term budgets and forecasts. So this entire process is the heart of the financial management. How you are managing your funds for short term and long term. Financial planning clearly starts with a plan about what you want to do, how you intend to do it. That's why especially in the social enterprises, what initiatives you are trying to make, and for the projects or the programs, and how you are intending to do it. Because the same objective may be met by different projects or different initiatives. So that's why how you are intending to do it, who is the target. So based on that, you have to produce the effective budgets, and that will be a fruitful exercise only if you have a good plans to base them based upon which you have to build the budgets. So the objective of how and how you are going to execute your initiatives or the projects is also a crucial part of the planning. So as far as the projects are concerned, you might already have come across this plan, do, check cycle, wherein once plans are set, the organization draws up its budgets and the needed cash flow forecast to help implement the plans. And especially when the year financial reports are produced to compare the budgets with the actual performance, this exercise will be done. And the review stage is actually where you check, and it is an important feedback for the next cycle of the financial process. It highlights, because that check or the review process highlights the areas where the plans did not happen or expected as expected, and this learning process will help to identify the revisions which needs to be made to the plans, and do the continuous cycle of this plan do check cycle in the projects or for the enterprise financial planning process. So generally, what is a budget? Budget actually describes in terms of monetary amount, either in rupees, dollars, or whatever the currency it may be required, that a project or an organization that plans to raise and spend for a set of purpose over a given period of time. So that's why this is a key tool in the financial management, and it has a number of different functions, like at every stage of a project. See, generally what happens, we do planning. At this stage, budget is necessary for planning a new project, and managers can build up an accurate or some estimate based projects cost for implementing the initiatives, and this allows organizations to work out if they have the money to complete the project, and if they are making the best use of the funds that are available, or else they go for the fundraising process. So here, even in the fundraising stage also, the budget is a critical part for especially the negotiation with the donors, and how much additional funding is required for the projects to complete, and what kind of projects the donors are willing to contribute. So the budget sets out in detail what this social enterprise will do with that grant, including like the money will be spent on, and what results will be achieved, the outcomes or the impacts that they will bring in. All those will be included in this process. Actually, when we do this, planning and fundraising is plan part, but when we actually implement the project, an accurate budget is needed to control the project. So once it has started, the most important tool for ongoing monitoring is comparing the actual costs against the budgeted costs. So without an accurate budget, this is not possible. So because plans sometimes change, and it may be necessary to review the budget after a project has started. Now the budget is used as a tool in the next stage, in the review process or in the check process, in this plan, do, check process. This is in the social enterprises or the NGOs. This is popularly known as monitoring and evaluation phase. In this monitoring and evaluation phase, after the project implementation or in the yearly cycle at the end of the year or end of the quarter, the budget is used as a tool for evaluating the success of the project. So when the project is finished or at the period end, it helps to answer the some of the questions that the funders or the evaluators, for the purpose of evaluators, whether the project achieved what actually it is set out to achieve. So this gives the information. So how can we understand this budget, and how we can say that once budget is made, whether it is a good budget or not? One of the important sign of good budget is that anyone who needs to or could pick up and use it to fulfill their budget management responsibilities. So first and foremost thing is the budget should be fit for purpose. For what purpose? And the right level of detail for the user, like even for the each line item level, it should be for a specific purpose, how much revenue is required, how much cost can be incurred. and it shall include all relevant income and expenditure items, and the cost should be clear and justified and accurate to the extent possible, and it should be easy to use in terms of calculations, in terms of the, if you have units associated with it, the units are measurable and clear, and explanatory notes provided to be provided wherever required in the budget. So in this entire budgeting process, a lot of people will be involved, right from the top management and the board level or the trustees level, where they discuss and approve the different annual budgets for the programs and operations. In certain organizations, it will be the working group or committees that will be formed for this purpose, who will oversee the annual budgeting process, or the or at the manager level, they choose to delegate some of the coordination for this budgeting process to the concerned resource persons or the accountant, if that is available, or the manager that is available, to make sure the budgeting process happens smoothly during the execution. Similarly, some budget guidelines and assumptions with the tables and the line items will be prepared and will be produced with detailed budgets for the activities or the projects. And then during that execution process, they support the various limits that were mentioned and ensure that the process for the approvals with reference to the limits are adhered to. Also, some external shareholders or the stakeholders also rely on these budgets to understand the actual work of the project in terms of, for example, the funding agencies requires budgets to see how an organization intends to spend its grants and to monitor the progress of the funded programs. And some of the community partners use budgets to see how organizations plan to spend money on the community projects. So even in this budget process also, there are variations. Say, for example, you have incremental budgeting concept, you have zero-based budgeting. Also, this involves activity-based budgeting also. So what is incremental budgeting? Incremental budgeting is nothing but, say, last year for this project, for this activity, say 100 rupees is required. So this year, because of inflation and all, we will ensure that there is a 10% increase because we are going to do similar activity. So for this activity, 110. So in total, the assumption is that whatever we have incurred in the previous year or for the previous project, there will be some inflation adjustment. So we will arbitrarily increase, like say, for example, 10% for all the costs. So this is incremental budgeting, irrespective of the activity or where not much details are available. Maybe one can resort to this process. Whereas in case of zero-based budgeting or the activity-based budgeting, you have to justify for each activity as if there is no budget at all. So for even for new and one-off projects where the experience is not there, so there this zero-based budgeting or activity-based budgeting is initiated, so that it starts with a clean sheet and builds the budget according to the planned activities and targets. For each planned activity, you have to calculate the resources for the listed quantities and individually costed for each of the listed items. So one of the important advantage of this zero-based budgeting and also the activity-based budgeting is they are more accurate, and costs are easy to justify and easy to update with new information, and it is favored by many donors. But one of the disadvantage is it is complex. Sometimes it takes a lot of time to compile because you need to associate the establish the cause and effect relationship there for this activity based budgeting, and need a lot of information before you create the budget. Whereas in case of the incremental budgeting, it is relatively simple. You just increase with one arbitrary percentage like 5% or 10%, and it is quick to create. But the disadvantage with this incremental budgeting of just adjusting 5%, 10% is it carries the risks. Whatever is going through in that previous budget will be carried forward in this budget also, that historical errors will carry over. And it is difficult to justify why that much amount is required, because you have certain base amount 100, for the next year you are simply increasing that to 110, and you don't have any real justification for that. And this reduces the innovation by encouraging teams to deploy the same plan and resources year after year when you follow this kind of incremental budgeting. So that's how the organizations have to decide whether they want to go for the activity-based budgeting or the zero-based budgeting, or whether they have full faith in the actual budget that was implemented in the previous year. So that is how they have to decide upon. And also another aspect is supply-led budgeting, where it results in say for example critical costs. Some of the critical costs can be sometimes they may be overestimated or underestimated sometimes. So that is where it makes a project with a specific budget. So that will impact your project directly, whether you go for zero-based budgeting or activity-based budgeting or this incremental budgeting. But if at the end of the day, when you actually do the activity and when the actual costs are not near to the budget, then definitely it will impact the project. So that's why somewhere you have to put some kind of reserve amount to allocate to the deficiencies in the budget. Sometimes at some items it may be over budget, at some items it may be lower budget, and we will see how these budgets will get impacted in alignment with the costs, because the nature of the costs are such that you will have some of the direct costs, some of the have indirect costs which are fixed in nature or variable in nature or semi-fixed in nature. So depending upon the nature of those costs also your budget will change from the actual budget to your actual cost which you have incurred. Also, while you are doing this process, another important aspect is whether you are planning your budgets with top-down approach or bottom-up approach. See, in the top-down approach of budgeting, what you see is what are your long-term objectives, and then what are your annual budgets, and then you come to the day-to-day activities. This is top-down. So in this, mainly the strategic initiatives, and then to the mid-level, and then to the short-term or to up to the day-level activities you plan in this top-down approach. Whereas in the bottom-up approach, the way you collect the data is starting from your day-to-day activities. So what is actually required for each day, and then how it rolls up to month, and then quarter, and then to annual, and then to your long-term projects or to the programs. In this way it goes. So this is called the bottom-up approach. Here, um, whatever you take it up, where operations staff are involved in setting their budgets, they will have a good perspective on day-to-day expenses, so they can well describe about the bottom-up budgeting. And whereas in case of top-down approach, you see the trustees or the board of directors, where you have a clear understanding of the long-term goals, and then you are segregating it to annual plans and the programs which you are going to do, and then to the daily activities. Then it is best described as the top-down approach and very suitable for that purpose. So you have to take the view, like at which level your organization has much more clarity, and accordingly you have to decide upon which way you are going to create. And this is not a hard and fast rule. At sometimes it may be a hybrid mode. For some budget initiatives, it can come from top down, and for some budget initiatives, it can go from bottom up. So I hope the purpose why we need to create is clear to you.
Yes, sir. I had one doubt. Can I ask right now?
Yeah, please.
Yeah. So, sir, you mentioned about direct costs, indirect costs, and some critical costs. Now, maybe direct and indirect. Still, because I'm from non-finance background, it is much easier to understand. But
Right.
critical costs, can you give some examples? And does it vary from NGO to NGO? Or certain costs are called critical costs? That was the question.
Yes, ma'am. So critical costs not only change from one NGO or organization to another organization, but even the projects will have some of the critical costs, especially for that initiatives. See, when you take up one initiative or a project, and say for example, you say, I'm going to give training or skill training, simple example. And who is very critical there? Say for example, the trainer has volunteered for you, okay, and you just planned for that on a particular day or Sunday, and you incurred, say, because it is a voluntary process, so you are just giving a honorarium or some kind of bouquet or some kind of what you call discounted price, like in the previous session we discussed it, right? So according to that you will plan. Say then that voluntary person doesn't turn up on that day, and obviously because of that person you cannot cancel your program. And if it is critical that you adjust some other person in that, so how much cost you are going to incur additionally to accommodate that? So that is one of the critical costs. So say in another aspect, in general terms, we can say for example, the surgeon is there, and his services are very much required at a certain point of time. Say for example, the eyesight operations or some cardiac operations where surgeon is very much required. Then in those cases, the amount which you are going to pay, which you planned, that is going to be the critical cost. And it need not be the main or the what you call
The routine costs. It may not be like a routine cost.
it may not be
Okay.
routine cost, but without which the
Without which the
entire
project
project
is-
will become endangered.
Understood. Understood. So this component might be a little lower than the other costs, correct?
No, no, no. It is not like you cannot tell that this will be less magnitude or more magnitude. It entirely depends
Okay.
on that initiative you have formulated. Why I'm saying this?
Okay.
Say for example, in the previous example, that skill training program, if you have you are depending only on that resource, then it becomes critical. But if you have 10 such resources voluntarily providing, then it is critical for that session, but the quantity or the magnitude will be much less.
Okay.
You got my point,
Okay.
right?
Yeah. No,
Yeah.
I think my question was the frequency would be lesser, right, of critical costs, because otherwise most of these generic routine costs we bill under direct or indirect. That was my question. So the frequency of or the occurrence of critical costs,
Huh.
will it be minimal and, or it is
Yeah,
depending from NGO to NGO?
yeah, and critical, it becomes critical depending upon the situation.
Yeah, understood. Okay.
Yeah, very less
Okay.
times it becomes very critical. And
Understood.
another thing, the miscommunication that happens, or the misunderstanding that happens with reference to direct cost and indirect cost. Okay, so when you say direct cost, I was about to tell it at later point of time, but let me be very clear about this. Direct cost is the cost which you directly associate with your activity. Say for example, you say that surgeon or the trainer's remuneration or the honorarium is directly related to that project. Okay, so and the, say for example, an accountant is there or some service manager is there, so you have 5 or 2 projects, then you so whatever the cost that was incurred for that manager, service manager or the accountant, you will distribute according to the effort for each project or equally to each project. In that case, it is called indirect cost. Okay.
Okay. Yes, got it, sir. Thank
Yeah,
you.
and one more distinction. Most of the times, this direct cost will be variable in nature. Most of the times, and indirect cost will be fixed in nature. Most of the times. Now there are certain times where this direct cost may be fixed in nature, and indirect cost may be variable in nature. So generally, direct cost will be variable in nature, indirect cost will be fixed in nature, but there are circumstances where your indirect cost can be variable in nature or your direct cost can be fixed in nature. Right, ma'am?
Do we need to mention the critical cost on the budget sheet also?
That is for the that is for the purpose of this note making, so that you are aware of the situation. Okay, so what are the things that go into the budget? So the first and foremost is the activity level. So budgets can be prepared for one activity area or a project, or where a project having several activity areas, or a program which is having several projects, or for the whole organization. So you have to make it a hierarchical, where from organization to programs to projects and to activities. So sometimes it will be also called to the extent of work breakdown structure level, if that is of that much detail. And the budget details, say for example, some donors, require very detailed budgets to show how each line is calculated. And sometimes some users prefer to see a summarized version, just to see the high level figures. So it also depends on that specific project or the requirements of the funders. And also coming from the time frame point of view, the budget is always with reference to a specific time period and for each activity. So for each activity for a specific time period, how much is the budget? So these typically cover monthly, quarterly, or a year, and it depends on the activity. So budgets used are for project monitoring and usually broken down into monthly or quarterly for review purposes. And currency is also an important aspect. Depending on the requirements of the project, see, especially for the NGOs where the funding comes in a different currency or the expense has to be made in different geographies, then this currency also plays a crucial role how you organize that budget amount. So in the home country, that is called operating currency. In the other than the operating currency, it is the foreign currency, and accordingly the exchange management has to be done, and it is one part of the financial management. Now after understanding the budget concept, there are three main types of budget. One is income and expenditure budget, and another is capital budget, and another is cash flow budget or cash flow forecast. So first we understand what actually this income and expenditure budget. So this shows the estimated costs of running an activity, project, or entire organization or program, where the funds will come from to cover the costs for a specified period of time. So altogether it shows whether there is enough income to cover the expenditure or there is any surplus or deficit. So this is the purpose. So to summarize, the income and expenditure information and show the overall position or the status of the budget, whether it is surplus or deficit or is it balanced. The purpose is to aid the project fundraising and monitoring. So if it is coming down, you need to ensure that the fundraising activities are appropriately planned to ensure your remaining project is completed, or to ensure your costs are reduced to meet the funds that you already got. And you should be able to complete your project with the available funds. So either way, the purpose or the usefulness of this income and expenditure budget is. How is it compiled? So we discussed about the incremental budgeting or zero-based budgeting, right? So depending upon the requirement of the organization, how much time they have for the project, what are the kind of resources and the knowledge they have with reference to the activities and the projects they want to, and the time frame they want to plan. Based on all this, they go for either the incremental budgeting or the zero-based budgeting. So the importance of this income and expenditure budget stems from the fundraising at the planning stage of the project life cycle, so that sufficient funds can be secured to fulfill its objectives. Also, during implementation phase, budgets are broken down into shorter time periods, like each month or year, so that income targets and limits on spending are very clear to the enterprise. And finally, at the review stage or the check stage, the phased budget is used to monitor the project performance to date. Even the variance analysis and all those comes into picture, where the standard budget amount and the actual what they have incurred will be compared with. And not only for cost, but for revenue also, how much they wanted to raise the funds, actually how much they have received. Sometimes it may be a surplus, sometimes it may be a deficit. So both on the revenue side as well as on the cost side. This is how the variance analysis will be made, and that feedback, that review process will happen, and that goes and sits into the next cycle of the budget.
So one question, sir. Historically, when we do the variance analysis, there used to be situations where people used to not spend totally. In the sense, they would cut the cost, and so that you have some extra money left for no cost extension.
Right.
But that is not generally considered a good strategy, correct? But when people say that that's exactly what you budget, you should be able to predict and spend the same thing.
Right. So there are two possibilities, ma'am, in that situation. One is there is no scope for the activity to be performed. Say, for example, when COVID was there, the project could not be executed because of the restrictions. Okay. So that's why it is left out. Another way is everything is in normal circumstances, but the amount is not spent, the objective was not achieved, the activities was not achieved. That means the planning was not good. The planning was not good, and the activities which they can't do were incorporated in the budget, and the budget was inflated. That is one possibility. So
They used to be cost cutting. Say, for example, you can do this program in X hotel, okay? And then you say, no, I got a cheaper one.
Right.
And I'll save that amount.
Right. So in this case, in this specific example, you said, then the activity is completed. Activity is completed successfully, but the cost wise it got reduced. So that is an efficiency in terms of cost utilization. So the budget surplus in cost will show the efficiency. So that's why in budget we will have the status of the in the review process, we say balanced budget when the income equals expenditure, and the deficit budget when the income is less than the expenditure, and the surplus budget when income is more than the expenditure. Whereas in the variance analysis, you do from the revenue side whether the funding requirement was sufficient for the project objectives. Similarly, on the cost side, you do the variance analysis, and whether the planned activities are performed or not, whether there is a surplus or deficit in the budget incurred. So based on that, your efficiencies of the cost or the savings will come into picture. Right. So generally this income and expenditure budget will be for a financial year. Generally, of course, there are situations where depending upon the project requirements or the program requirements, it may be more or less. And another important type of budget is the capital budget. So the capital budget is also similar in format to the income and expenditure budget, but only the purpose for which the budgets were created is for capital projects purpose. So when we say the capital projects or the term capital, it refers to the items of assets or equipments or investments that will be used over several years. So that is the term represented by capital. So capital projects means equipment or investments which are used for several years. Say a trust or a society or a social enterprise needs a building. So construction of building is one asset. So one infrastructure asset. So that is for the construction purpose, we need one budget. We prepare that budget, and that is called capital budget. So for capital project purpose, we are creating a capital budget. Or sometimes what happens, a major renovation, normal renovation, annual maintenance renovation will be the income and expenditure budget only. But where you do because there are leaks in the slab, or you need to extend your current infrastructure, or you are making some sheds extra for some other purposes, then those are all forming part of your capital projects, and the budget you allocate for them will be capital budget. Similarly, some of the office furniture or equipment like computers, which will give you a life for 4 or 5 years, or some kind of medical equipment, or some water tanks installations, or sanitation infrastructure. All these form part of your capital projects. So the budgets you create for these capital projects will be capital budgets. So how these are distinguished for the why we have to distinguish them is, whereas in the income and expenditure budget, that is only for that particular year. Whereas for this purpose, the budget this is for the equipment or the construction works or the machinery will be part of organization's fixed assets. So you will also claim depreciation on those fixed assets that are coming through this capital budgets. So this why this capital budget is important is to be able to monitor the major investment and also the one-off costs involved in capital projects. Sometimes what happens, you from time point of view, it may not need much time. Say, for example, you want to purchase one medical equipment for your project, and that is one-time capital investment. For that, then the capital budget is for procuring that machinery or equipment or that surgical equipment. So it will be like major investment and also one-off costs involved in the capital projects. And capital budget includes one-off expenditure, and it is possible to use the zero-based budgeting approach to create it, and usually include some contingency or unpredictable variations to the budget. It is especially when your operations are spreading across geographies because of the exchange rate fluctuations or changes in the technology. So that also will impact your budgets, and there is more in capital budgets. They are prone to more variations compared to your income and expenditure budgets, because some of the costs like insurance and insurance cost, the what you call the transportation cost for that equipment, or the storage for that equipment, or the customs if you are importing, that customs duty which you have to pay. All these will do a lot of deviations from what you have initially predicted. So somewhat unpredictability or contingency will exist always in the capital budgets. And the purpose is the capital budget projects represent a higher risk to an organization, because there are significant amounts of money is involved and they are valuable assets, and it is important to list and monitor them separately. So that is the importance of the capital budgets. Now, another type of budget is the cash flow budget, or sometimes this is also called as forecast, because we are beforehand forecasting that. So this is called as cash flow forecast also. To distinguish with the income and expenditure budgets, so whether a project has enough income to cover its anticipated costs over a whole year, that will be shown in the income and expenditure budget. Whereas the cash flow forecast or the cash flow budget helps to identify when actually you will get that cash. So your income statement will not provide you the income, and the expenditure budget will not provide you the details of actually when the cash is available. So this cash flow budget will actually tell you when the cash is available, when the cash inflow will be there, and when the cash outflow will be there. So cash inflow is the revenue and cash outflow is the expense. So this alignment helps to identify some of the times during the year when the cash levels may become very critical in nature. So the cash flow forecast is also useful if the organization has substantial cash reserves which needs to be invested wisely to maximize the investment income. That is the other angle of the cash flow budgets. So a financial plan, this cash flow budget is a financial planning tool which shows the predicted flow of cash in and cash out of a project or program or organization, again each month or quarter, to show the periods of cash shortages or surplus, so that you can plan accordingly or align your activities according to your availability of the cash. Now, because most of the services are such that you can get them paid after a certain period of time. Say when you purchase some items from a supplier, they will give you a credit time, say 1 month or 45 days, or some discount if you pay before. Similarly, when you are providing the service, you may ask immediate payment, or you may give some time to the debtors. And that is how the difference between the actual income and expenditure and the cash flow budget deviates. So you have to align this deviation between the income and expenditure budget to your cash flow budget. And if the deviation of time is too much, you will not be able to manage it properly, and there is bound to be this debtors and creditors management problems, and will result in the cash crunch. So this is called treasury or liquidity management. So you have in the financial ratios how effectively you use your cash flow. So here the process uses the income and expenditure budget and also the capital budget and the project activity plans and schedules of the anticipated income to predict when the incoming and outgoing transactions will take place. So the importance comes from the necessity or the need for the cash to buy the goods and services when needed to implement the activities. And this is especially relevant where donors choose to pay the grants in arrears and require an organization to pre-finance the project activities or repay for project activities upfront and get reimbursed later. So for all these purposes, this cash flow budget is required. Now, while preparing this cash flow forecast, you have to keep in your mind few things. You will need a project's timed activity plan. See what happens. You have the schedules, right? That schedule should be in alignment with your schedule of activities. It should be in alignment with your timelines, and the income schedules, the income and expenditure budget and the capital budget are all aligned with these activities for the purpose of creating this cash flow budgets. And to set up a cash flow forecast table, sometimes you can use the spreadsheets, which are this will make the entire exercise easier, with the budget items listed on the one side, left side, and the periods on the another side on the top, so that for every budget item, how much is the amount, you can put it across, and this will give you an approximate timeline activity for each activity, in which timeline you will get the cash flows. So based on the income schedule and the expenses, you will expect the cash in the cash flow table, and you will be able to appropriately mark it down how much cash you would be getting in each month, and you align it with your income statement. Here, important thing is, based on the activity plan, you have to make the basis for the activity plan, and you plot each payment in the cash flow table according to when the actual cash will exhaust. So sometimes what happens, you will get some unpredictable expenses, like say for example, there will be a breakdown of your generator, or there will be a breakdown of your ceiling or roof, so that needs immediate repair, and that won't be in your budgets. So estimating that, or however accurate it may be, you need some contingency reserve to be maintained in terms of cash. So also you need to ensure the payment terms are according to the requirements met for your cash flow requirements. Say for example, payment terms from vendors, you may be paying immediately, and for debtors you are giving 2 months or 3 months time to pay you back, then it will be a difficult situation, and always you will be in the cash crunch. So you have to manage such that whatever the inflows you get, you could match with your payments or the expenditure requirements. And also ensure that some of the in-kind donations and the capital budget, where we have the capital projects, that depreciation are to be excluded for this purpose of the cash flow budgets. So sometimes you need to understand few tricks for the cash flow management from this budgets. This is especially for the cash flow management. The project and the finance teams needs to work together to find a balance or the solution. Like examples include, like you need to negotiate with your donors to receive grants yearly, or ensure that you get, like every month before 5th, you get to match your expenses of that month, and negotiate with your suppliers to make delayed payments of invoices, and reschedule some of the activities if the cash is less, or arrange a temporary loan facility with the bank. These are some examples. And then there could be negative consequences sometimes, because it is important to take action with an eye on the associated risks. And delaying payment could affect your relationship with the suppliers, and the delaying activities could adversely affect the project and the relationship with the other stakeholders. And when we arrange some temporary loan facility, this will attract the interest, and you should be able to pay the bank charges and the interest. So all these you have to consider in the cash budgets. Now, we discussed the zero-based budgeting, right? Apart from the incremental budgeting. So another aspect is activity-based budgeting. When we are discussing, we took the zero-based budgeting and the activity-based budgeting more or less similar terms, but actually, if you see in more detail, this activity-based budgeting, this is very important for the efficient execution of the project. So activity-based budgeting is widely used in the development and humanitarian relief sector. So it is ideal for creating accurate and complete project budgets. So it lists down the and quantifies all the costs, all the resources, like the people required, the material required, the equipment required to run the activities in a kind of project plan. So the resources, quantities, and the calculations are captured in a detailed worksheet called budget worksheet. So maybe a spreadsheet. So the details are then summarized in the format. See, why I am not showing it actually is it really depends the budget activities and the periods and the units. So the best approach for the budgeting is the activity-based budgeting process, and this should be kind of group exercise with brainstorming, because if you see the process, it is an 8-step process. First and foremost, you identify the project objectives, what you have to do in that project. And then you list down all the activities or the tasks of that project. And you identify and quantify the resource requirements. What are the resources that are required to fulfill the activities? Now, for that resources, whatever you want resources, how much cost you are going to incur, and how much is the income which you will get or which you are going to be needed. And then you compile the budget that is required for this project. And then you review the results in the plan, do, check process. In the check process, you will review the results, and then you summarize the budget. So this is the usual cycle of this activity-based budgeting. And this is very efficient form of budgeting compared to the other incremental budgeting or zero-based budgeting, but this is also one kind of zero-based budgeting. So for budgeting purposes, even for the activity-based budgeting process, it needs clear and measurable project plans, and the key documents like project proposal, log frame model, or timed activity plan, like kind of Gantt chart, and budgeting policies and guidance from the what are the salaries that you are going to incur and the benefits that you are going to get, what would be the indirect costs and the contributions which you are going to get, and the organization's chart of accounts for identifying various cost centers and the responsible centers, responsibility centers, and activity timetable for submitting the budgets for the alignment with the activities. All these are all required for this budgeting purpose. So altogether in this 8-step process, you identify the project objectives, you list down the activities, and you identify and quantify the resources that are required, and you research the kind of cost you need for fulfilling those resources, and you identify the known incomes and the sources that are required to fulfill or to support the project, and you compile the budget worksheet according to the needs and review the results, whether it is balanced or deficit or surplus, and re-verify whether the calculations are correct. And then finally you summarize the budget, where the budget, if it is a spreadsheet, the budget worksheet is whether ready, and it also is useful for internal and external purposes, and what needs to be hidden and what needs to be shown to the external donors or other stakeholders. So here another important aspect is about this activities we discussed, right? This is, there will be a work breakdown structure, or sometimes they call it as project breakdown sheet also, wherein all your activities were listed for with reference to your time and associated with tasks, and what resources are aligned with that task and how much cost. So in that way, the entire project is breakdown in a hierarchical way, and that gives a flexibility. Say for some of the projects, the project managers needs to be there, or the CSR managers needs to be there, where huge activities are involved. So for them, this kind of arrangement of project breakdown structure or work breakdown structure is also included. And that is task based and activity based, and particular milestones will be assigned to be completed. One of the example, if you want to see, so for example, one project where the sanitation packs needs to be distributed for villages. So what are the activities that needs to be performed in that project? First, what are the different wards in that village as per the panchayati, and then who is going to be allocated for each ward, and how many female beneficiaries are there, how much is the requirement for each family, and on which days they will be available to receive the sanitation packs. All these will be included in that, in terms of the packs per month, or the number of units that needs to be distributed, or how many times that needs to be distributed, and in how many wards of that village are to be catered to. And if the programs are big enough, they will be covering multiple villages as such, or particular districts as such, then the project will be huge, and this kind of arrangement will be very useful. That's how the project management will happen in these organizations. So some of the examples just for reference. I mean, this is not hard and fast, but generally we come across such kind of things. In the typical budget items, you get the personal costs. The personal costs like salaries, benefits, staff recruitment, staff development, and volunteers expenses. All these generally comes. And this may be measured, employees are measured in terms of days or person days or per month or per session or per trip. Like this, the units will be made for these activities. Similarly, for transportation costs like fuel, vehicle insurance, airfares or taxi fares or distribution costs, it will be either kilometers or trip or per month or per week, depending on the nature of the transportation cost. And another important is the program administration. For this, generally you will have the fixed rent and electricity, water, sometimes insurance and telephone and postage, office stationery, internet and repairs and renewals, bank charges. All these will be forming part of audit fees or consulting fees, always forming part of the administration. And this may be per month or per session or per quote or the lump sum amount per project. These are all part of the program administration. Similarly, the project costs for accommodation purposes, the publicity costs or the training materials, or sometimes the professional or consultant fees and the inputs that are required as the resources like tents and tools, also equipment and the food. All these forming part of the project cost, like per day, per trainee, or per person, per head, or meal day, number of meals, or per quota or the event. All these are part of the expense heads. And you need to ensure that you plan for the contingencies. There will be always unforeseen expenses for items that we think we might need. So it is sensible to add an amount in the form of contingency to meet any kind of unforeseen things. And please, when you are adding the contingency, please make sure that you don't add as a percentage of the overall budget for contingencies, because this is very difficult to justify, and also not every line in your budget truly needs a contingency. That's why, to the extent possible, make sure the contingency to the extent the specific act or the activity or the line. Of course, it is also difficult to monitor because it is not possible to allocate the entire contingency to a particular account code. So one has to have a proper control over using that contingency amount.
So, but contingency, how we can do without a percentage, sir? Because we put at the total budgets. When you're putting a contingency, the usual practice is that it's on the overall budget. Most donors don't allow contingency. That's another thing.
Right. So that's why, ma'am. So what happens? You can say that, okay, one activity is planned in summer, one activity is planned in rainy season, one activity is planned in winter. 3 projects, right? The transportation cost in summer might be okay, because there is no contingency at all there, and there is no chance of rain or weather contingency. But if the project activities planned in rainy season, you need to ensure that on that particular day, if it rained, you need to provide for additional infrastructure. So some are really, you can predict, but some you cannot predict. In that case, what it is mentioning is for that specific line level or activity level, you ensure according to the reasoning, but don't put it as a percentage on the entire budget, because entire budget you will not be able to substantiate. Try to make it a reasonable assumption for which activities there may be a contingency.
Sir, can we use for budget of contingency of previous year reserves and surplus?
Yes. See, but only thing is, sometimes what happens, the funder or the donor will not allow that. But if you give the substantiation why you are making that contingency, then definitely he will agree if you can show the cost.
So my control can be reserves and surplus of the previous year if there is a surplus.
No, whatever the surplus is there, again that is falling under the next period's budget. Now, whatever the contingency cannot be by default the previous year's surplus.
No, if it is surplus, then I can take a limit of that surplus now for my contingent liability.
So, sorry, I did not get you.
If there is a surplus in my reserve, can I take a limit for my budget of contingent liability for future prediction?
Yeah, because that surplus is nothing but you would be able to cover it up, right? If any changes are there. But deficit is there, then there is a problem. You need to make sure.
Yeah, I understand. This is understand. If it is surplus, then we can.
Somehow you can manage with that.
Yes.
So, Mr. Verma, actually, you were telling, is it not correct not to put percentage contingency as a percentage, because contingency by nature is something you don't anticipate. For example, we're doing an event and there are more than expected people and it exceeds the time, so we have to provide for some refreshments. Normally the average is, so when we work on some things, we use averages.
Right, sir. So
sometimes there could be more. So generally we just keep a contingency as a percentage.
Yeah, in the immediate example only, you told about there may be an increase in time, there may be increase in number of persons, right? Like that only you told, but you didn't tell as a whole for the project. That's what in the management or for the good management practice they tell is, you identify where could be the contingency, where could be the activities go wrong, or where could be there is a occurrence of more cost, or you may get less revenue. So identify them and ensure that you do percentage for those line items rather than for the entire project as a whole. You got my point, right?
Yeah, no, I got the point. What I'm asking is it wrong to put it as a percentage, or is it because if you take a list of the activities that we do, I think almost 70-80% of the activities, the list, they all are possible candidates for contingent expenses.
Right.
So
there is no right and wrong with the contingency or even taking the percentage of the contingency. Only thing is, on the scientific basis, what they say is, almost 80% you will be able to predict correctly for a project.
Yeah, so no, in this instance, supposing, see, typically we are expecting about 100 people on an average.
Right.
It is typically in a band of, let's say, 80 to 120, 130. But sometimes 200 people turn up. So when 200 people turn up, almost all the expenses, from refreshments to distribution of pamphlets to the PA system to procurement of chairs to the shamiana to the availability of other resources like doctors and nurses, volunteers, I think every cost head, all
Right.
barring
And
one or
also you see your project objective and the scope, whether the scope includes to accommodate all the beneficiaries on that particular day limitlessly, that also you will see, right? Or otherwise you will beforehand fix that, okay, your resources are available to cope up with this much turnout, right?
Yeah,
That
no,
you have to
we
see.
do keep that, but then you can't really turn away people who turn up. And second thing is, it's always a challenge to bring people on. So
Right,
when
right.
there is a big rush, we actually welcome it, even if it
Oh.
means stretching ourselves till 10 o'clock or 11 o'clock in the night.
Yeah,
Or
especially
asking them
for
to
medical treatments, definitely I see this kind of on a
absolutely.
particular day they turn out very high, and on a particular day nobody will come.
Yeah.
Yes, and
Yeah.
it's actually a good thing to have because you can't ask them to come again.
Right,
They won't turn up. I mean, if you
right.
tell them today the quota is closed and you people go back and come tomorrow, it means we've lost a lot of potentially we could have served a lot more beneficiaries and we've lost all of that. That's what it means.
So
So
that's why the activity-based budgeting is very important. So you will be able to identify which costs are directly associated with the number of people that are getting turned out, and which are fixed costs in nature. So based on that budget, then you can say that, okay, even if 100 people are turning out, we would be, I mean, the fixed cost, other arrangements cost will be the same, but the additional or the refreshments or the additional medicine or other things which directly proportional to the service, that only you need to provide. So
including
that's
some
where
of the
the
fixed
that's
some of
where
the fixed
the
costs.
experience comes into picture in your providing the contingency reserve, in which
Yeah.
items you need to be is
No, I
based
get
on
your-
that direct costs.
So basically what you're telling is if you can justify, you can use any method.
Yeah, and especially in this case, in this example, the direct costs are there, right? With reference to your activity, those direct costs you need to increase the contingency, but not for the fixed costs like that.
No, even for the fixed cost, it goes up. For example, if we are giving an honorarium to a doctor, it is usually fixed. But on that day, we have to give more honorarium. Because it's a courtesy. I mean, you fix a honorarium for all the resources.
That's what one need to understand, whether you are giving honorarium based on the say payment is based on the number of persons they have treated
No,
or
it is
verified,
based
or
it
on
is-
a particular day how many irrespective of the number you treated, it depends.
No, it is based on a particular day. But then courtesy remains. Supposing you are asked to take classes for 2 hours, but then suddenly you are required to take it for 6 hours today.
Okay.
It means that courtesy requires that you are paid more than what you would be otherwise paid.
Then the nature of the expense varied, right? Now it is no more fixed cost. The honorarium which that is given to me will not be fixed cost. On that day, I am getting more amount based on the number of additional hours. So that is not fixed. That is semi-fixed.
It's more a critical cost, isn't it?
Yeah.
No, critical cost.
No, not critical
Critical cost. In later. Supposing in this, what we do, for example, there are some people who are screened and, they're recommended for further examination. So there could be about 2%, which is from past averages, we understand it is about 2%. So we actually request for an additional, those examinations are pretty expensive and they have to be done separately.
Right.
So we request for 2% of the total screen be provided separately, etc. I think my understanding is that.
Yeah, this is positive. This is positive side of the critical cost. What you took the example, but the negative side of it is on a particular day that doctor didn't turn up.
Yeah.
But all the persons already were waiting for the doctor. Okay. And in that case, you will ensure that even if some more you have to invest or double the rate you have to invest, you will ensure whatever the other doctor is available, right?
Right.
So that will be part of your critical cost in a negative way. The initial example you said is in a positive way, further reinforcing the requirements of the beneficiaries.
Right.
So in practice, having a total bottom line contingency budget is more practical for us as NGOs, because one line item will go up. Even if you do line item by line item, then when you're doing the evaluation, then not valuation, sorry, evaluation of the funds or
That's what, man. So if you can appropriately identify the nature of the cost, whether it is direct or indirect, or fixed or semi-fixed or variable, based on that, you can restrict to only some line items and remaining things, because project involves your office expenses, right? Office expenses or fixed insurance charges, all these things. So some items you can remove which are not directly related to your beneficiary activities, and based on that you can make a percentage, then you can substantiate it. That's what the underlying idea.
When we do, we give a description on the contingency saying that these are the most likely elements where there's going to be a variation.
Right.
But we don't put it line item wise, because that becomes a little tough when
No. What I'm saying, you don't put line item wise. You aggregate some of the line items and you don't include some of the fixed items for contingency purposes.
Okay.
Say, for example, 10 items are there, okay, for your project purposes. Out of those 10 items, 3 are like direct costs. It depends on the variable cost, depends on the number of persons comes, okay. And 1 or 2 items are like semi-fixed in nature. After 50, after 100, after 150, there will be a step cost. There will be increase in cost for every 50 members, like that. And another cost is fixed cost. Irrespective of number of persons comes, that will be fixed in nature. Then you exclude that fixed in nature from your contingency, and you ensure the remaining are direct costs. So that's why you are putting contingency fund on that line items as a percent. Then you will be able to substantiate.
Because nowadays we put, like, suppose a training is there. All costs related to the training is a program cost. It doesn't go into your administrative cost. So we actually don't differentiate direct and indirect when it's
that's what, ma'am. That's what. See, it depends on how you are making your actual budget. Training may be a project, okay? And is the training for a particular day, or is it the series of days are considered for a project? So it depends on that. But if you are considering only 1 day training, then you will not be able to differentiate that.
Because most of the trainings are about 4-5 days, 3 to 5 days are the average trainings, unless until you're running a academy. Academy is a different part.
No, suppose skill trainings are there. Most of the corporates are supporting those skill trainings in different areas. So one geography after another, one village after the another, that will be conducted. So in that case, it is the series of the same activity, but you will be able to identify which will be your fixed costs, and irrespective of the number of persons attending, and which will be the variable in nature. In that way, in that sense, I am telling.
That's an academy. That's more like an academy, I would put it, like where your primary job is running trainings.
See, that is one project. See, when social enterprises take up, one part is they themselves will do on their own, and another part is they collaborate with some other organizations who are specialized in nature or in various geographies. Say the same project I can do in Telangana, but the same project I cannot go and do in Maharashtra. So I will collaborate with the other persons and get it done. In that way, the same activity which I am doing spreads across the geographies, and whatever the budgets I make here will make little bit adjustments according to the geography for the cost, and that will populate to other states as well.
Yeah, okay. But populating to other states also is differential because trainers in
Yeah,
this
definitely.
cheaper.
Geography wise, yeah, beneficiary wise, it will change.
Not even a benefit, even trainers. Suppose I have
Huh.
to take trainers in Delhi and I have
Yes.
to take trainers in Orissa. There's a
Yeah.
world of difference.
Definitely, yeah. So, one thing is, when the project budget worksheets is completed, the final stage of this is to summarize the data into different format budgets as required. One is for your internal management purposes, and another is to create for the donors who are external in nature. The stakeholders need at some high level, where they don't need at each and every task and activity level. So according to that, you need to format different budgets depending on the purpose, for external purpose or for internal management purpose. Even the trustees level or some of the service managers level don't need very detailed budgets, whereas the execution team or the project team needs each and every activity serially, at what time needs to be completed, at what cost it needs to be completed. Everything should be clear. So depending on purpose, you have to format it.
I'm not
And
interested in a meeting.
And remember that different users need different levels of detail. So that is why we need to create summary budgets, and the budget worksheet, the format depending upon the requirement, it will be of great use for the implementing team of the project. And the summary will be useful for the internal management or the board members who prefer more of an overview where actually the project is heading.
Namaste, sir. I understand that these budget formats usually depends on the different program activities. But then if we have some sample budget format, that would kind of help.
Ma'am, why actually there are a lot of samples available in the internet also. Why I didn't specifically give you? Just you type any NGO budget, you will get a lot of things. But the main pro forma is whatever the activities you do are on the what you call the line items, and the columns headings will be your periods. This is the basic structure.
Okay.
So that's why I didn't put any example, but it's very much available everywhere. Even yesterday I shared one Excel, right? Or otherwise I will share again if you don't get it. In that also it is there. Okay. So to finally wrap on this, important tips for preparing is there should be a narrative for this budget preparation. Without narrative means you are not substantiating, you are just giving some numbers. Okay. So that's why always check the funding agencies guidelines, and to be clear what their specific requirements are for a budget narrative. And some donors helpfully provide a budget narrative template for you to follow, because they know, say, even if it is a corporate entity, they have a budget narrative. And remember that the reviewer of your funding application will not be familiar with your local context in which you are working. He may be in Mumbai, but you may be giving the Kolkata prices, or the donor may be in Madhya Pradesh and you are in Mumbai. So they will not have the complete picture of your local context, the prices and the practices. So you must clearly explain how this budget lines are calculated, and in as much detail as possible. And one good rule of thumb is to see if the narrative could be used to reconstruct the budget line it refers to. If the narration changes, how that will impact, and you would be able to directly change the amounts in that line item. Also, ask around other organizations that have successfully won the funding, and any tips on preparing the budgets or narratives for specific donors, because certain donors are very particular about certain aspects. So what helped them achieve that funding, so that will be useful and you can replicate in your case. So what costs did they scrutinize most? Sometimes some way very particular, because they have a specialized field in particular area, so they will scrutinize mostly in that particular area where they have expertise, and they almost ignore the other aspects. So were there any cost they have rejected because of their scrutiny? Or also ask some of your colleagues, when you give a proposal, to read your proposed budget and budget narrative, to check that all the costs are clearly explained and justified. Because in our mind, when we prepare the budget, we think that we put everything and it is very clear. But unfortunately, the second person who reads that budget and the budget narrative will not be able to relate, because our mind will have some preconceived notions or understandings, and we think that the other person will also understand in the same way, but that is not true. That's why it's always better to give the budget or the narrative for the review purpose, so that any deficiencies or any further explanations can be updated and justified. So I think yesterday I discussed with the chart of accounts, right? How many of you are familiar with the word chart of accounts, or have any idea?
No idea.
Okay.
Idea.
Okay. So, ma'am, why I'm telling is may not be appropriate for the other professionals, but a small idea of this will be very beneficial. Okay. See, chart of accounts is nothing but a code combination. Say, for example, I say company code is 2 digits. Okay. 0102, like that. Okay. That is company code. So I may have only up to 9 subunits or the sub-geographies of my organizations in different states. Then company code with 1 digit is sufficient, because 9 locations only. Okay. So if I have 10 or 99, I need to have 2 digits company code. Okay.
I didn't get it, sir.
Yeah. So say, for example, your trust in Hyderabad is 01. Okay.
01. What is 01?
Code, a code.
Code.
Sorry,
Okay.
for example, PIN code you have, right? PIN code.
Okay.
So,
Fine.
so 5 represents the initial number represents the state, right? Like that. In this also, first number represents the company code. Okay.
Yeah.
So your company, your trust number of trusts are only single digit. Then one single digit company code is sufficient. But if your operations are across the country and across the geographies and international level, then you need double digit or triple digit code. Okay. So that you can accommodate up to 999 different trusts or the social enterprises.
Yeah.
Okay, so that is company code. And then the next what you call the next component after company code may be a natural account. So in that company, say for example, in that first 01 or 1, you expended for vehicle maintenance. Okay, so that is expenditure. All the expenditures starting with 3 series, say 30. Okay, say 30. I give 30. 30 is for petrol vehicle maintenance. 31 is for diesel vehicle maintenance. So in that way, say for example, I incurred 1,000 rupees for petrol vehicle maintenance. So my company is 01 and my petrol vehicle is 30 and I incurred 1,000 rupees. So 01 30 amount against that is 1,000 rupees. And I incurred 1,200 rupees for diesel maintenance. Then 01 31 against that I will incur 1,200 rupees. So like that the code combinations will be there. So with this purpose, what happens to the deepest level? Now this petrol vehicle 01 30 and then for a particular geography I can have another code combination, and again for a particular project I can have another code combination, and again for a particular period or some other subdivision I can have another code combination. In this way, whatever the expenditure I am incurring against a particular financial item, vehicle maintenance or salary, this will give only high level picture, but I don't get a picture of to which project, at what level, at what subdivision level this is incurred is not available. But with the help of this granular chart of account cost structures, I can incorporate cost centers or the projects or the programs. So directly I will be able to correlate how much cost I have incurred for a particular project or for a particular program on that particular site. So cost accounting will be a additional parameter to your financial structures. So in this way, what do you say? You will have more granularity and visibility of where you are actually incurring the expenditure. Instead of just saying I incurred 1,000 rupees for vehicle maintenance, you are saying I incurred 1,000 rupees vehicle maintenance for a petrol vehicle at a particular geography for a particular project.
Yeah, I got it, sir. Yeah.
So in financial management, they ensure that these cost centers are incorporated and that financial management will be much more efficient and the control will be more, and there won't be any what you called misappropriation or misleading of funds for one purpose to another purpose. If you have this kind of granular level of total visibility to the extent. So I will Just give me 1 minute. Just trying to share one document. Please go through this one, okay? This is the true cost statement. I think yesterday I shared, but if you didn't get that, please ensure that you complete this exercise by using this. Yeah, I shared that. Please confirm whether you received it or not. Yeah, try to complete this exercise. That true cost picture sheet I shared. Okay, because this will give you hands-on and give you the complete picture. Okay, is it clear? I mean, you are able to get that file in the chart I shared?
Is there a directory of terminologies?
Yeah.
Do you have it which you can share? All these terminologies that you're saying, is there a description compilation?
These are mainly the costing, this thing where you will be able to find. You know Investopedia, ma'am?
Yeah.
In that you will get any financial term. You will be able to get that in that.
Okay. Because there are so many terminologies that you've taught us, and we'll be lost in those terminologies if you don't
Right.
backwards and check out.
Right. I have a source, but I think that will be too much, ma'am, for you to understand. That's why I'm not sharing that. Otherwise, we have the generally accepted cost accounting principles document, wherein in entirety that will be explained, but that will be too much for you. If you want it, I can share it. I mean, if you want.
Share it. We will only pick up what we have learned.
Yeah, okay.
Because we won't look at things that we have not heard.
Okay. Yeah, I shared that one also. Mostly all the jargons will be covered in this.
Thank you, sir.
Okay, yeah. So thank you all. Thank you for giving me this opportunity.
Last
And
class, sir.
Okay, sir. Thank you
we,
so much, sir. Thank you for
we
taking
will
Last
meet.
class?
We will meet on Sunday. Sunday, is it at 2:30 or 3:30?
Sir, it's 2:30, yes.
Yeah, okay.
So participants, we meet on Sunday at 2:30.